Hello, guys. I had a request from a delegate of mine to do a series of videos on the strategies. Now, the only thing is, I'm not legally allowed to really kind of cover our strategies in detail and put it on the web. So it's a tricky thing. But what I wanted to cover, at least in this video, is talking about taking pivot trades. And there's a reason why. There's a couple of things I want to cover, is because I know obviously when you have your coaching sessions, you're in a boot camp or you're in a course, everything seems so simple. Of course, when you're at home analyzing the chart yourself, it's a bit uh, it's hard to remember, and it's like it was so easy when I was sitting with my coach. I don't know what's going wrong now. Anyway, so I thought that's the idea behind this video, is just to recap on a few things to look for. So when you take your trades. And obviously a couple of other things that we want to sort out. So on my pivot page layout, what I have is, and remember that, guys, I trade all the cross pairs. Okay, I don't just trade the majors. I think it's a major mistake to just trade the majors. And well, it is. It's not I think so. It is a fact. That it's you just limiting yourself to charts that are incredibly susceptible to to current political, economic sort of agendas and all kinds of stuff that's going on at the moment. So the crosses are just producing some really nice. Look, just remember that these strategies are trending strategies. So you can't trade a chart that isn't trending, but you can trade a chart that is trending. If it's Euro Aussie, then you should be trading Euro Aussie. So you should be looking for a trending chart. Okay. Um, so I'll do something here briefly, which is to outline. First of all, the if you remember from the course material, you were actually most of us have. I have a number of different pivot point tools here. Okay, to bring up my pivot levels. Okay, it also sits under here, so I can see all my different pivot levels for the day. So I'm just going to take this away for a moment, and I'm going to show you something. And this is very, very, very important. Okay, so the first thing I'm going to do is start with a blank chart, which is just my price action. And we'll take, it doesn't matter what the currency pair is, it doesn't matter. So we'll take the euro. It's Sunday today, so the market's kind of asleep. It'll probably kick off in about 5 or 6 hours. And I'm going to go through to my pivot formulas, which you should all have. And then I can bring up all my pivot points. I'm going to go with pivot point all and bring it up. And what this has done is, doesn't you can't really see, there's actually something in here that's where my central pivot is. So that one's not really the most ideal one. There used to be another one that we had, which looked like this one, pivot points all three. So this is another one. It's in the manuals that you do on the course, I think. Basically, it's very simple. The pivot is calculated each day. It acts as intraday support resistance levels. This is a 5-minute chart, and so I can see all the price action. This is Friday. This is now Thursday and Wednesday. And so what happens is, at the end of the day at 12 o'clock, as we switch over from one day to the next, it takes the high, the low, and the close of this day, and then calculates new pivot levels based on that. Alright, and then it does the same for this day. But these levels will often coincide as support and resistance levels. So this is something we need to take into account, and we have here our central pivot level. We then have an R1 up here and an R2 and an R3. So it goes to R1, R2, 3, R3. And in between, we have these middle lines, which is 0.5 levels. So this will be R0.5, R1.5, R2.5. Okay. And this will be our S1, S2, S3 with the 0.5 levels in between. Okay, so it's important to take note of this. Now, guys, originally the strategy we were taught to take the trade, let's say we were taught to take a pivot long trade in this particular case. And originally we just had the daily chart and the 5-minute chart, and it's been changed to what you currently have, which is the 60 and the 5 minutes. But it's something you need to be aware of that. So manually we would actually enter live. One of the way I promote orders at the moment, I promote orders because in terms of the laws of probability, your success rate is probably the same whether you place an order, whether you enter live. But because of course the trend of the market's going to go where it's going to go. But we have, sorry, and I shouldn't just say that and end like that. What I mean is the market's going to go where it's going to go based on the daily trend. So if you can read the daily trend correctly, then then it's going to go through the pivot. If you get your entry, it's just going to go through because the daily is actually going to override the intraday stuff. So whereas, we were originally taught, well, based on the reaction here, you might get a bounce, then it would hit that entry, then it would come up, and that's the one you would take. So we would study how it behaved around that level. But that's not really the case anymore. If you guys are studying your end of day charts, which you should, if you're doing end of day trading, you'd know how to realize your probability of going forwards rather than backwards will help you get a winning trade. So, but what I want you to take note of here is essentially a pivot trade takes an entry from the central pivot line here to, if we're going long, if we're buying on the chart, we will buy at this level. We will take profit 5 pips below this level. There's a reason why it's 5 pips below. It's because we have no guarantee price can go all the way nearly there and then turn around. So that can happen. So we have a rule which is you must take profit 5 pips below R1 in this particular case. And our stop, and this is very important in case any of you have forgotten this, our stop is tucked away on the other side, protected by S1. Okay, so it's protected below that level so that acts as some form of support so that price can't really get to it. So we have it 5 pips on the other side of that. Alright, so there are a couple of things this is so important that I don't know, there's a bug in the software that I need to bring up here. I need to illustrate this. So I'm going to bring on the pivot indicator that you currently have, and I want you to compare what happens. So the first thing I'm going to do is I'm going to just point an arrow to where our R1, our pivot level is, and of course our S1. Okay, so in this particular case, in this example, if we were going long, what that means is that would be our stop. That would be our stop over there. In fact, our stop would be 5 pips below that. Okay, and that would be our entry. Alright, which will make green. And our target would be 5 pips below here. Now, I'm not too concerned with the risk reward. Visually, I can see the risk reward doesn't appear to be that great, but the fact is the probability of the move in an uptrend on the daily is going to go whether you like the risk reward or not. It's just going to move. So, and in fact, actually you could even argue philosophically that the likelihood of a price move over a short distance is actually greater than price moving over a longer distance. So you could argue that a lower risk reward actually has a greater probability of winning. So there's that idea. So now, yeah, so look, we'll have price go through, and I'm going to switch on these levels, but I want you to observe what happens. So we want our target's going to be approximately, well, it's going to be 5 pips below this. Our entry will be here, and our stop will be 5 pips below this. So once I apply the the indicator that you have, I want you to notice what happens. We have our blue lines on top in the correct place. We have our green line, which is your target, which is created for you, is in the correct place. But the stop is in the wrong place. It's 5 pips that side of this level of S1. It's a bug. I'm not sure how it happened, but I have submitted a ticket to get it fixed, and I haven't heard anything back yet, but I am following this up. In the meantime, the best thing I can do is to alert people to it. So please note that your stop should be on the other side. It should be protected by this. Alright, this is very important. So it should be protected and tucked behind that, okay? Because you will see the price often comes and bounces on that level and moves on. So you want your stop on the other side of that. Alright, that's very important. Okay, I think I've repeated myself. I think I made it about as clear as anything. If you find that you want to learn how to trade without using that indicator, then what you're going to have to do is to use one of the standard pivot indicators and just trade in the direction of the trend. So you'll have to do it manually, but at least you'll be happier that you're trading it kind of that way. Right, the next thing that I wanted to demonstrate, in fact what I've done is I've actually taken this, I've had someone modify this for me. I edited the code to remove the 0.5 levels and instead just put in the standard levels. So that's actually my indicator here that I use, which is quite cool. So I just have S1, S2, S3, R1, R2, R3, and I just trade it through. And I put my target manually 5 pips below that, and manually my stop 5 pips below that as well. So I can just look over here and I can see the difference. Alright. Next thing I want to show you is that I have 3 different time frames here. So I have the 5 minutes, the 60 minutes, and the 4 hourly. So in my personal opinion, the 4-hourly is incredibly important because it can give you, you need to identify that trend. Alright, you need to identify that. I'm looking here and immediately my eye is going to what appears to be resistance, resistance, a breakout, and a retest of that to become support, as an example. So that's immediately what I want to see in terms of just reading the chart and normal technical analysis. But you need to be able to see a good trend of high lows, high highs if you want to go long. So let's just say, for argument's sake, in this example, we're just going to talk about going long. So we just need to make sure we see a strong trend. The 4-hourly gives me some safety there. The hourly, to be honest, like I said, you can just place an order there, and the likelihood of it, if your bounces and your trend is strong, the likelihood of it going through to target is the same. Regardless of what your risk reward is, it's irrelevant. Price is going to move over that distance. So you can take all the trades if you're reading the trend correctly, regardless of the risk reward, and that's a fact. And then the other thing is here is the 5-minute chart. So if you need to enter precisely, then you can enter precisely if that's what you want. But basically, I find that I can enter just off the 60. So in my opinion, a 60 and a 4-hourly is worth more than a 5-minute and a 60. The way that the indicator works, just to switch it on and demonstrate it, is that it takes the 50 and the 200. And basically it determines if the 50 is above the 200, it tells you to go long. So you'll notice how this is incomplete. eSignal downloads bars, and it downloads it as you request it. So what I'm going to do is I'm going to click and drag in the bottom here, and I'm going to squash this up, and it's going to download more bars, and then you're going to see this line update. But I want you to see how that can affect things. That can particularly affect charts where those lines are very close together, and it can change the direction here. So I've spoken about it before. I'm going to go see if we can do it again. This is telling me to buy. So I'm going to just look through a couple of charts and see if there's any where those lines are very close to each other. Let's have a look. Okay, so we've got something there. The Swissy, Aussie, Kiwi, let's see, CAD. Alright, let's try this one. Let's try this one. So these two lines are right close to each other, and it's telling me that it's a sell day. It's a sell day. So what I'm going to do is I'm going to pull back and update it, and if it changes to a long day, then we can see how important this is. It may not, but let's see if that's the case. There are a couple of others. So CAD is telling me to sell. Let's see if we can find a few more before I do this, so I can. Okay, so that's saying long day. So Euro Yen is saying long. No, that's long. You should be trading this. These are pivots, just standard pivots. Nothing there. Yen pairs. Let's have a look here. Pound Swissy, Pound Aussie, Pound Kiwi. Sorry, I'm looking to see if there's anything nearby. Maybe the Swiss yen pairs. And let's have a look here. Okay, there we go. Possibly Aussie Kiwi. So that Aussie Kiwi is wanting me to sell, and CAD is wanting me to sell, and was it Euro Yen is wanting me to buy. So let's see if any of those change. Okay, so basically let's go to CAD and let's update this. There we go. And short day, let's see if it changes. Let it update, let it download more bars. Okay, it didn't change anything. If anything, it actually widened. So we'll go across to Aussie Kiwi. And Aussie Kiwi is still a short day. Let's update this. Let it update. There we go. Okay, that hasn't changed anything. And what was the other one? Euro Yen. Let's see if that's changed anything. No. Okay, so I seem to always be pot out of luck, but just wanted that to update and see if that does anything. Yep. So the key to a really good, strong pivot is potentially, if it's ranging, but you need this protection. You guys need to look at price action and see if price action is above your stop, then you're fine. In this case, price action is almost always right where that stop is. You can tell that if our pivot was 10 pips further away, so that's your rule of thumb, this red line is always in the wrong spot. So it's always 5 pips too close when it should be 5 pips the other side, which means it's a total of 10 pips too close to the blue line. So no matter which way you're doing, if you're going long, this needs to be, the red line must always be 5 pips further away from the blue line. That's basically it. It must be 10 pips further away from the blue line regardless. So if you're selling, so if you're looking at something like Aussie Kiwi, alright, you'll see here what's actually happened here, why that color has changed from green to red, is because the lines have crossed over each other. So that's where that comes from. But I wanted you to observe that your stop, in this case, this red line, must be 10 pips further away from the blue line if you're going to sell. So if you're going short, your stop should be up here, 10 pips further away from your target. Okay, that's quite important. And next thing is, yeah, we're looking to see a nice clear trend. So we're looking to see something that's predominantly cycling upwards, something like this perhaps. Euro cable is predominantly cycling up. We look at some of the yen pairs. Let's have a look here. A lot of these are going sideways, so not really a great deal. Let's have a look at things like Euro Aussie. Some concerns, potentially this is due for pullback just in terms of its cyclicity. But yeah, it's a fabulous chart. So these kind of things, I want you to observe how they are bouncing like stepping stones on the pivots. So these are great charts to trade. Here's a classic example. I mean, this kind of thing where it comes very close to your stop. Your stop should be down here. It should be much further away so that you're protected that way. Okay, let's see. There's some stuff here. Yep, there we go. Okay, your stop should have been further away in this particular case. It actually used that line as support. So just be aware of that. Okay, what else have we got? Let's see, Pound Aussie. Let's have a look. Yep, there we go. This is a nice trend. Again, I want you guys trading stuff that's trending. It's bouncing on the pivot levels, bouncing on that. It's just great. And then you just take a buy order on that. And if it comes underneath, it'll pass through. So we look at Pound Kiwi. Pound Kiwi. Perfect low test bounce on this. I mean, this is just no-brainer trading. Now what's happening at the moment is it's going through a sideways consolidation patch. And the reason is, why? Look how far away it is from these moving averages. So it's actually due for a pullback. Right, so and there's a high test there. So right now it's overdue for a pullback, very much so. That's probably why it's doing that. So you need to probably leave it until it's bounced off here and gone long again. But yeah, certainly for a long time, this is an incredibly good chart that's producing really good results. Okay, just bounce, 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 bounce. Euro Kiwi. Anything else? Also the same thing. Okay, so these are really good setups. This one, here's a classic example, Euro Aussie. Both of those you would have been fine if your stop was in the correct place. Alright guys, so just have a look at that. It's the best thing I could do to alert you to it. And I might cover that again in a midweek market focus, because this one doesn't go out to everyone, but the midweek market focus will get watched by everyone. So obviously I will alert people to this. But again, yeah, the secret to pivots is finding a trending chart. Placing an order doesn't really matter. You can place an order, and if the likelihood of success is the same, whether you place the order, whether you enter live, and yeah, and then just remember to keep a stop in the correct place. So I'm going to leave that at it, and otherwise, yeah, have a good weekend, and I'll chat to you soon.